Whenever the stock market pulls back, investors usually respond one of two ways. Some people panic, others start looking for opportunities. And of late, the market has not necessarily been pulling back as a whole, but certain sectors have taken it on the chin. In fact, the semiconductor sector is in correction territory. Personally, I've always believed that some of the best long-term investments are made when great companies temporarily fall out of favor. Because here's the reality, stock prices fluctuate every single day. Business values don't. And in today's video, I'm going to be sharing 4 investments that I believe are worth buying on the recent pullback. And only 2 of these stocks are semiconductor companies. Regardless, these 4 investments could reward patient investors over the coming years. So with that being said, let's jump right into stock number 1, which is going to be NVIDIA, stock ticker NVDA. I said this when Amazon was trading below $200 per share, calling it the easiest buy in the market. The stock popped. Today, I'm transferring that phrase to NVIDIA. Now, I know some investors look at NVIDIA and have doubts, whether it's competition from other chip companies or other companies building their custom chips. But I always come back to one question. Has the long-term investment thesis actually changed? The reality is the fact that we continue to have a supply issue. We continue to be in the early innings of this AI revolution. NVIDIA is sold out for the next 12 months or so of their chips. Demand for AI infrastructure remains incredibly strong. In fact, heading into this next earnings season, analysts are increasing CapEx budget estimates. Hyperscalers continue investing hundreds of billions of dollars into AI. We are still in the early innings of this enterprise AI adoption, and NVIDIA remains the clear leader in this accelerated computing. And that all makes the investment in NVIDIA a great one. Shares of NVIDIA are up less than 10% this year, underperforming the greater S&P 500. And here's a look at the company's latest earnings, in which revenues grew 80% in the last quarter and net income grew over 120% year over year. This is how companies become cheaper. Even when their stock price is rising, the earnings are growing faster than the stock. And when it comes to analysts, they rate the stock a strong buy with an average 12-month price target of $310 per share, roughly 50% higher than current levels. And in terms of valuation, the stock trades at a 20 times multiple this coming year, which is in line with the median S&P 500. But when you go out to the end of 2027, shares are only at a 16 times multiple, which is insanely cheap for a company like NVIDIA. Do not miss this opportunity in NVIDIA. And before I move on to stock number 2, I want to thank today's video sponsor, which is Moomoo. I constantly vet different tools that will help you as an investor, and I only partner with companies that I use myself. And that's the same for Moomoo, which is a powerful investing platform with so much information packed, especially when using their user-friendly app. Whether it's looking at the financials, analyst price targets, or even option flows, Moomoo has it all at my fingertips. And right now, new subscribers can earn up to $1,000 in NVIDIA stock, the very stock we just talked about, and up to 8.1% APY on their uninvested cash, which is pretty remarkable. Check out the link in the description below to take advantage of this great deal. Now, with that being said, let's move on to stock number 2, which is going to be Qualcomm, stock ticker QCOM. This is the second semiconductor stock on the list, and this stock has been a roller coaster. The stock jumped to nearly $260 in the month of May, and now we have it back down to $190 per share, nearly wiping away all the gains of 2026. But that's okay, because that gives us investors that have been patient and didn't chase the stock higher another opportunity. Most investors still associate Qualcomm with smartphones, and rightfully so. I think that's becoming outdated, though. Today, the company has exposure to AI-enabled PCs, automotive, edge AI, Internet of Things, connectivity solutions. And one trend I'm particularly excited about is on-device AI. Instead of every AI request being processed in the cloud, more intelligence will gradually move directly into laptops, smartphones, and edge devices. That's exactly where Qualcomm is positioned. And I like the growth we are seeing in EVs, which essentially is a computer on wheels. That goes for gas-powered vehicles as well. The company already has decades of expertise designing highly efficient chips. As AI expands beyond massive data centers and into billions of connected devices, I believe Qualcomm could become a much bigger beneficiary than many are giving credit. Now let's jump back here to the Moomoo app where we can see analyst ratings, where they rate the stock a buy with an average 12-month price target of $221, suggesting more than 15% upside from current levels. Do not sleep on Qualcomm as that value chip play. I like NVIDIA better, but but this is still a great company with a solid balance sheet and a CEO that has given this old tech play new life. Now for stock number 3, which is going to be Palantir, stock ticker PLTR. And this may be, well, in fact, it is the most controversial name on the list. Palantir continues dividing investors. Some believe it's dramatically overvalued and the threat of AI is too much for the company. Others believe it's building one of the most important enterprise software businesses in the world. Personally, I continue focusing on execution, as wonky as the CEO may seem. This is a premier player in its space, and the company continues delivering. Commercial revenues continue expanding, government demand remains strong, and artificial intelligence platform adoption continues growing. One thing I personally like about Palantir is the fact that they're not just simply talking about AI, it's helping organizations deploy AI into real business operations. That makes the story much more tangible. Yes, the valuations remain premium, not as crazy as it once was when the earnings multiple was above 200x, but still high. But premium businesses often trade at premium valuations. And for long-term investors, meaningful pullbacks can provide opportunities to build positions over time. When it comes to Palantir, shares are down nearly 30% in 2026, as it's got mixed in with the sell-off in software stocks earlier in the year. But the company continues to deliver. Earnings in the latest quarter grew 75%, with net income growing nearly 200%. Hence the stock being cheaper. And looking here at analyst ratings, we could see analysts rate the stock a buy with an average 12-month price target of $182 per share, implying more than 40% upside from current levels. Still, a stock with a forward earnings multiple of 60x, but earnings are growing nearly 100% this year and more than 40% next year. I won't have a huge position in Palantir, but if you are looking for a jolt in a stock that has been put on mute of late, take a second look at Palantir. And now for the final investment, which is not a stock, but rather an ETF. And that's going to be the VanEck Gold Miners ETF, stock ticker GDX. Gold was the trade of the year in 2025. In 2026, it's down 5%. In the past, gold was a hedge to market volatility, but with rates higher right now than they were last year, there's more options for investors. In 2025, rates were lower. Investors went to gold. However, over time, I believe rates will in fact back off and reduce. I continue to think inflation will remain sticky, and we will see in the second half another run from gold or the precious metals. Some may choose to invest in the precious metals. I tend to lean more towards the miners, and GDX gives investors a diversified exposure to many of the world's largest gold mining companies. Gold often performs differently than technology companies. It can benefit during periods of geopolitical uncertainty, elevated inflation, declining interest rates, or increased market volatility, all of which I think we can see in the back half of 2026. Rather than trying to pick one individual mining company, this ETF spreads the risk across multiple businesses. I also believe many investors remain underweight the precious metals. Adding a position like GDX can help diversify a portfolio while still providing upside if gold prices do return to strength. Year-to-date, shares of GDX are down more than 10%, prime for a buy-the-dip candidate. I'm looking for a bounce back in precious metals in general in the back half of 2026. And at first glance, these investments, they look differently. One dominates AI chips and has built an AI ecosystem. One powers connected devices. One builds enterprise AI software, and one provides exposure to gold or gold miners. So why own all four? Because they each benefit from different long-term trends. I'm not trying to predict the stock movement of the next month. I'm building a portfolio that can benefit from multiple economic environments: technology, AI, software, inflation protection. Diversification matters, especially after strong market rallies. One of the biggest investing mistakes is assuming that every pullback is something to fear. Sometimes a pullback is simply the market giving long-term investors another opportunity. That's exactly how I'm viewing many of today's opportunities. I'm staying focused on businesses with strong competitive advantages, long growth runways, and management teams that continue executing. For me, NVIDIA, Qualcomm, Palantir, and GDX all fit that description. GDX is a collection of companies. Will they move higher in a straight line? Probably not. But if these long-term investment theses continue to play out, I believe today's prices could prove attractive several months from now. So if you enjoyed today's video, make sure you head down there and smash that like button. It truly helps the growth of this channel. Leave a comment down below. Which of these four stocks are you most intrigued with? And which stock are you looking to have the biggest rally in the second half of 2026? Thanks again for watching, and we'll see you in the next one. Take care.